theoretical. We have a lot of evidence that these things have massive negative externalities, from funding terrorism to money laundering. And if anybody reads Zeke's Fox in the book Number Go Up, he has a whole chapter about how there's these horrible compounds in Cambodia where they keep these women like locked up and forced to like run scams against people in the West, and they use like Tether stablecoin as the vehicle to facilitate these crimes. And these would not exist except for crypto. Like if you try to go to your bank today and say, I want to wire, $500,000 to some Chinese gangster, they're not going to let you do that. There are safeguards in our system. And like you couldn't run these kind of massive frauds were it not for crypto. And then it's kind of like whataboutism that there's a lot of crime associated with the dollar. Well, yes, there is some crime associated with the dollar, but like the dollar is also like the world's reserve currency. It has like the M2 money supply like $20 trillion or something. If you take even like 0.1% of that, yeah, of course there's going to be some fraud, but like the dollar works as a currency. It facilitates global commerce and is the backbone of the world's most powerful economy. So the whataboutism is very kind of, it doesn't make any sense because our current system already has safeguards for these things. Crypto is designed for one thing, which is crime. And that's why it's quite dangerous.
That's a great point. And Jenny, I know you're pro crypto or you're pro Bitcoin, and you're someone I always love to listen to because your heart is absolutely in the right place. You're not. I always feel like your goals are to look for opportunities and look for excitement and look for something that's new and different and might help people and might make the world better. And I know you're also kind of put off by the scam artists. So what's your take on this? Because I feel like it's getting more and more compelling, the idea of the criminal use for a ban. Am I a little off base here, or maybe I'm missing something? You're a good one to tell me that I really want to hear from.
Well, hey, John. Hey, everyone. No, you're actually not off. Although I am pro crypto, which is so odd, but here's my take. Actually, I hopped into your space this morning because I actually started reading your tweets like around 8 a.m. I'm in Pacific Standard Time. And I read your tweets to Zach, how his comments were kind of insulting. And if I were you, I would be insulted too. So I'm with you on that. Then I read your tweets to this guy named Wheezy about Gensler and Bill Hinman. And I'm also with you on that. But like you share, my take when it comes to cryptocurrency. Now, those who are following me on Twitter know that I have been extremely hard and outspoken on slamming the bad actors in the crypto space. Of course, as I would love to see cryptos thrive, gain widespread adoption, even a bull run. But I believe all of that should happen after we lock up and put away all of the bad guys. And I think we're only like maybe 25% there. And those who are curious, to know who else I believe are bad guys, just follow me on Twitter because I'm really outspoken on that. And then in terms of cryptocurrencies, John, and Stephen and Nora, you're welcome to, chime in if I'm wrong. I would love to learn if that were to be the case. But my thoughts are this way. Just as not all cops are bad, not all apples are rotten, it's important for us to remember that the actions of individuals, let's just say, like Gensler or Bill Hinman, if they're proven to be bad, okay, I may agree with Hinman because I've read a lot of stuff about him. Gensler, it's kind of a 50-50 for me right now with Gensler when it comes to, is he a bad guy representing in the SEC? But my take is, even if they were, okay, that doesn't make the entire SEC bad, because we have to look at it as a case-by-case basis. These guys, Gensler or Hinsman, their actions or statements don't necessarily defend the legitimacy of the entire regulatory body, okay? Similarly, John, this is my stance on cryptocurrency. When we assess cryptocurrency, we should base upon the use cases. And of course, I'm pro-crypto, okay? In terms of like when it comes to use cases, like for example, the basic that I believe in cryptocurrency, it's still the innovation. I love the smart contracts. Okay, smart contracts automate and improve various industry. I do love the decentralization because it reduces the central authorities, which of course I don't like. Anything that's too much, it's just bad. I do like the security for blockchain technology. Because I've proven that because I do build products in the Web3 space, blockchain, so I'm aware of that. And to a certain extent, minus Ethereum, because there are other blockchains, the fees are lower. Okay, if we talk about like Bitcoin or Ethereum, yes, I don't know why those are being used because their fees are like sometimes more than fiat. But there are other legitimate blockchains that the fees are super low, and not to mention the speed of sending money. All of that to me, when I'm a builder in the crypto space, it's been proven to me. I like it, I support it, but I just don't like the crimes, the frauds. Innocent people are getting scammed, and a lot of the things that you just shared, John. Right before Stephen and Nora jumped in, and then I came in. I agree with all that. So I believe, just like in the year 2000 when the internet, came about, there's always bad and good in everything. I believe in the cryptocurrency space. as AML KYC is picking up, as the government, as you mentioned, John, President Biden wants to hear from everyone so he can make the legitimate decision. To me personally, I do believe that blockchain and cryptocurrency are here to stay. Now, that may sound really bad right now, given what we have to go through with the bad actors, and that's why I'm such a strong voice, of getting rid of all of the bad actors. I mean, I would love to wake up one day and all of the bad actors would disappear. We would have some kind of regulations in place for AML KYC. Large companies, and I'm going to mention names right now, Tether, COINBASE, especially COINBASE, that I've been slamming Brian Armstrong and COINBASE because, it's guys like Brian Armstrong and COINBASE pretending to be the Robin Hood of crypto, whereas, do what I say, but, don't look at what I do. I mean, those are the things that I totally despise, especially from Coinbase. And that's why I've been hitting it hard. But that's just my take, John. And again, I love you as a person. I follow you on LinkedIn, Twitter, but that's my take.
Well,
Thank you so much.
Yeah, I love hearing your perspective because, again, it always makes me understand exactly what's going on in the space. Let's turn to a couple subjects that you just said, and then I want to get some of the other callers in too. I wish everyone was like you in the space, Jenny, but they're not, right? Unfortunately. But Stephen, let's talk about smart contracts and speed. I've heard you say, and I agree with this, that we already have digital currency, and there's really no need for any more digital currency. And then I've heard you say, and I agree with this too, smart contracts are neither. That in some cases there may be a use for an automated contract, but in finance, it's a dangerous proposition. And I realize technologists can differ, but what's your take, Stephen? I've read some of your writings on smart contracts also.
Yeah, I'll address both points. I mean, we have digital currencies already. They're called the dollar, the pound, the euro. These have been digital for 20 years. I mean, digital payments are universal and they work very well. And national currencies actually have a mechanism for price stability. So crypto assets are rubbish currencies because you can't price anything in them and you can't denominate long-term contracts in them because they have no mechanism to achieve price stability. And that's baked into like the very design of these protocols. There's a fundamental logical contradiction at the heart of all cryptocurrencies that will forever limit its use. And then the smart contracts, they're just a bad idea. I mean, you don't want to have programmable code written by people. People are corruptible. They make mistakes. They can write code that has flaws. And if you don't allow a mechanism for interdiction to allow law enforcement to supersede like the operations of these things, you end up with a very brittle system, which is used for creating very risky financial products, for facilitating crime, and creating protocols which undermine our securities laws.
Yeah, Jenny. No, those are that is a problem. Like stable coins, there's no audited financial statements. They pretend to have these things called attestations and proof of reserve reports, but the Public Company Accounting Board, the PCAOB, has specifically said that those are not anything near a substitute for audited financial statements. It's like the equivalent of an appraisal of my house, but done by an independent appraiser who comes and looks for everything from termites to the groundwater and comparing that to a satellite photo. That's how I would compare a proof of reserve or attestation or whatever. And it's really annoying how the stablecoin entities, they really do, they pretend that they use these flashy terms and they kind of adopt this nomenclature that makes them sound like they're real financial institutions when they aren't. So I'm totally with you there. Jenny, I didn't want to cut you off before. How do you feel about, what is your response to some of these ideas?
Well, just going back to what you were saying about, keeping your 529 plans with, a trusted financial institution, etc. I agree with you 1000% on that because why? Of course, I founded 2 investment banking firms from the ground up. So I deal with clients like yourself. Financial clients have been used to, like yourself, keeping their assets, as the crypto space would say, custody with brokerage firms like Goldman Sachs, Morgan Stanley. Of course, in the crypto space, we call them exchanges like Coinbase, Gemini, Kraken, etc. Now, in traditional finance, John, I'm sure you're familiar with SIPC insurance, which is from Wall Street. And then there's FDIC for banks, right? Now, in the crypto space, we don't have any of those things. And I can totally understand why is because look at all the bad actors. Who would want to be the insurance for, a space that has so many crimes and frauds and scam? But my thoughts are, and of course, because of the bad actors, most of the millennials, probably some Gen Z and the younger Gen X generations, they rather keep their coins and tokens in cold wallets instead of hot wallets, which would be with the exchanges. Now, recently, Mark Cuban has proven that because he was hacked and lost, nearly $1 million because he kept his coins and tokens in a hot wallet. Okay. Now, here's my point. My point is, I believe, because again, I believe in the crypto space, that eventually the crypto space will become a hybrid of some sort in the future of decentralized and centralized when it comes to custody, because you were talking about, keeping your money with a safe place. And then eventually, if and when that day happens, when all of the bad actors would go away, okay, taken out, locked up, or whatever the case may be, maybe some third party or even the federal government, again, this is way in the future, may come out and offer some sort of insurance just like the FDIC for banks, just like SIPC for traditional finance. And then maybe the crypto space at that time would earn trust. People will come in, it will get more adoption because, to those who follow Coinbase, Coinbase always tout things, but they exaggerate for their own benefits. Coinbase always touts that, there are 50 million Americans who own crypto assets. Now, I'm not saying that that's wrong, but what is not right is the facts are there's just less than 5% of the global population is invested in crypto. That's the fact. But they don't choose the fact because the fact is only 5%. They chose the number 50 million because it sounds ginormous. But the facts are that's not true. So, that's why I think, or I believe, the best time for regulators to come in full, hard, kill all the bad actors is now because it's only 5%. Because I would hate to see, I usually call it a cesspool, CESSPOOL, of the crypto space. If this 5% continues to grow to 10, 15, 20%, imagine the cesspool of frauds and scam is going to grow with it. And so that's why I'm so outspoken lately about it, because I think it's perfect timing. I still have hopes for the crypto space, and I believe it for the future, but that's my take, John. Thank you so much.
Yeah, no, I appreciate that. I think one where we're definitely aligned is the idea of criminal prosecutions. And I said this when I was at the Federal Reserve with Stephen a couple weeks ago. It's amazing to me that the CFTC can essentially allege a criminal enterprise orchestrated by Binance. And the SEC can also allege, and the CFTC complaint is like 75 pages, and the SEC complaint, I think, is 130 pages. And those are very long complaints. I did a lot of litigation when I was at the SEC, and complaints are typically a lot shorter. But when you write a big, long complaint like that, it tells a story of a terrible crime and alleges fraud. And what's amazing, because DOJ has really not acted in enough cases, it's not just where you have someone like one of the Winklevoss brothers saying, oh, well, when the SEC comes, we don't care because it's a glorified parking ticket. That's bad enough, but it's really an overstatement, because sitting right next to Stephen on the panel of the Federal Reserve building in Philadelphia, sitting right to the left of Stephen, was Paul Graywall, the general counsel of Coinbase, and one of the architects for Coinbase's business operations. Now, Coinbase is charged by the SEC with operating as an unlawful exchange, an unlawful clearing firm, and an unlawful broker-dealer. So Coinbase is, and I felt like I was in Alice in Wonderland, because I couldn't remember any conference I'd ever been at. And I also actually host quite a few conferences myself with I help out a friend, Bruce Carton, who does a lot of enforcement conferences, ransomware conferences, all sorts of cyber conferences over the last decade. And I did a lot of conferences when I was at the SEC, too, as part of being the chief of the Office of Internet Enforcement. And I can't remember a single time I had an SEC defendant on the stage. Now, having said that, of course, Bank of America gets sued every 6 months for some kind of securities violation, but it's not being sued for like the essence of their business, which is what Coinbase. So I just found it incredible that I was sitting in the Philadelphia Federal Reserve and I was listening to Coinbase talk about the wonderments of crypto and the wonderments of what they do. And I realized, it dawned upon me, that the SEC action is not only, it's not a stain on Coinbase. They don't look at it that way. They look at it, at least in my opinion, this is all my opinion, is a badge of honor. And I think, and this personification, what you mentioned before, Jenny, one of the tweets this morning was that, the SEC is corrupt, and people love to say Chair Gensler is corrupt, and they really personify the SEC in the chair, Gary Gensler, which is completely misguided, because chairs come and go. I worked for 7 or 8 different ones, and they don't have unilateral authority. In fact, the SEC, Securities and Exchange Commission, is probably one of the most non-political agencies in all of Washington, D.C. Their frustration, I'm sure, to Coinbase, just anathema to them. Could they stomach that sort of sudden regulatory paradigm applied to them? So they made this argument that what they sell is just like selling Beanie Babies. And they literally use those words in one of their filings. And that's just ridiculous. The economic reality is that they're selling things to people who think they're going to get rich quick, and they're doing it under the auspices of financial inclusion, which is an out-and-out affinity fraud. So those are my opinions. People, someone was saying, all you ever do is tout your experience, Stark. Big deal. You did all these things. Big deal. Well, look, experience actually means something. When you want to get, with my kids, when I want to, have, if one of my kids has to have surgery or has a problem, do I go to a trained surgeon who's been doing something for 30 years, who's had all kinds of success, who teaches at a university, who writes academic papers, who lives and breathes the kinds of surgery that they're about to do on one of my children? Of course, that's how life works. So this idea at looking at my experience and saying, okay, boomer, whatever. And some guy this morning said, you're always just shouting about your 98 years of experience. I say my experience and I put it out there. The same reason that I put it out there that I don't have any financial interest in anything crypto. I say all these things in hope of saying, okay, well, gee, this guy's been doing this a long time. He doesn't seem to have an agenda here. Let's take him seriously. Let's find out what his sources are. Go to digitaltrustwatch.com, where for free I listed all the many articles that I've read, which include the Concern.tech letter, which include all sorts of videos, all sorts of discussions, and years and years and years of research. So, stating my credentials is not me trying to flex. It's not like, again, it's not like buying a Louis Vuitton bag or a Rolex watch. Okay. It's 35 years of working in a space and understanding it and waking up every morning, living and breathing it, and teaching for 20 years, both at Georgetown and Duke, and getting your active teaching several courses. Sometimes at Duke, I taught several where, just preparing. Last week, I just did a guest lecture at Scalia. It's like 2 or 3 days of preparation just for one lecture. And then the course that I co-teach takes even longer. And in cyber, you teach essentially a new course every year because the law changes. So the bottom line is, when it comes to all of this stuff, just thinking about it and digging into it and listening to every point of view makes a lot of sense. Jenny, you've been patient and have your hand up. Why don't you take the mic, since I think I'm done with my rant. The second rant is...
we love your rants, John. It makes sense. And, and especially in the crypto space, if we don't share our background, we're literally mixed with a space that literally just a bunch of, pumper and, pump and dumps, but I raised my hand because I just wanted to give a quick comment to Isaiah. Oh, Bitcoin Isaiah. Yeah, he's still in the room. And here's my thought. I have a lot of friends who are hardcore Bitcoin believers. I get that. They've been in Bitcoin since the birth of it, or a year or 2 years after the birth of Bitcoin, and they've been in it since that time. Look, I commend them. I praise them. I support them too as well. But here's my take. Okay. When it comes to the innovation, Bitcoin is like a shiny diamond, right? But in a muddy, very muddy pond. The diamond itself, which is Bitcoin, is decentralized and valuable. But the muddy pond represents the centralized entities around it and its sketchy exchanges such as FTX, Binance, and Coinbase. Okay. And just like John mentioned about Coinbase and the actions that the head of Coinbase, which is Brian Armstrong, is taking to me, is for righteously self-gain. Okay. And the people who back them should be ashamed of themselves. And questionable stablecoin such as Tether, USDC, which we've already seen Luna collapse, Binance is about to blow up, etc. And those who are ignorant enough to defend these crooks, okay, I'm not mentioning any names, for their own self-gains, should also be held just as accountable as those who are actively involved in these, what we call criminal activities, or keeping the cesspool growing for their self-gain. So anyway, my conclusion is, these entities have turned the surroundings of Bitcoin murky with fraud and crimes. So until the pawn is clean up, and that's why John is fighting a good fight, and I back him all the way, even though we kind of have a little difference when it comes to his belief in crypto and my belief in crypto. That's the only thing. Again, until the pawn is clean up and these centralized actors are held accountable, the diamond's reputation, which is Bitcoin, will remain tarnished, in my opinion. That's all I wanted to say. Thanks, John.
Thanks, Jenny. Shane Hazel, I just pulled you up as a speaker. Do you want to unmute? And I'm not sure what your opinion is, but it sounds like you're really knee-deep in the space, and it's a pleasure to meet you for a long time. In the meantime, Jenny, why don't you talk? And then Shane, your hand popped up a minute ago, too. Go ahead, Jenny.
Just a quick question for you, John and Stephen, about Bitcoin, what you guys just said, how the SEC categorized it as not a security. Do you both think that they said that because no one can find Satoshi Nakamoto? Now, if we put Satoshi Nakamoto in place, that he can be found, he's, somewhere as a human being, would that, would that change in any way? Because even if they were to categorize it as a security, how would they go after Bitcoin when the snake actually has no head? So that's just my curiosity.
No, I think you make a great point. I think, the way the SEC Enforcement Division manages their priorities is they start with the low-hanging fruit, right? So the low-hanging fruit were the initial coin offerings. Those cases were easy to bring. They were slam dunks. Just laughable. You call something an ICO, and then you claim that it's not supposed to be like an IPO. It reminds me of that movie Coming to America, when John Amos had a store and he called it McDougal's instead of McDonald's. And he was like, trying to differentiate his from McDonald's, but the reality was he was copying. So that happened with initial coin offerings. Then what they did, I think, was very smart, was they did the 17B celebrity cases, like DJ Khaled, Kim Kardashian. That actually came a little later, but it's the same principle. Steven Seagal, Paul Pierce, who had played 1 year with the Wizards and was great, but obviously in crypto, not so much. And that just is that's a Section 17B of the 33 Act, which is called the anti-touting statute, and it's an anti-fraud statute. And it just says, if you don't disclose the nature, source, and amount of compensation you're receiving from an issuer of securities, then it requires that you disclose the nature, source, and amount of any compensation you receive. And if you fail to do that, you violate the statute, and it's a strict liability statute. So it doesn't matter if your lawyer said it was fine or if you didn't know about the law. There's no defense under any circumstance. If you were paid and you didn't disclose that, you violate the law. So it's a very easy case to bring. So they did the 17B cases, then they did the simple agreements for future tokens, then they did the lending products, then they did the staking products, then they started hitting the intermediaries like Coinbase and Binance and Beaksy and others. Then they've started hitting the NFTs, the non-fungible tokens, the ones that most clearly resemble the security. And so, Jenny, in terms of your analysis, I think Bitcoin would be miles away, because I don't think the SEC doesn't want to bring cases that they think they might lose. They don't want to put resources into cases that are overly complicated to the point where it's distracting. Now, having said that, of course, they had to charge these intermediaries. These are very complex cases, the Binance case and the Coinbase case, and they're dramatically different. In Binance, the SEC actually sought an emergency asset freeze, which is probably the biggest asset freeze they've ever done in history, and versus Coinbase, which has not been charged with any fraud at all, but just operating again as an unregistered exchange, broker, dealer, and clearing firm. So I don't think I think the idea that maybe some of these exchanges will survive because they have they're just trading in Bitcoin. It's just hard for them. It's hard for, I think, public companies not to continually try to expand. And to the one defense that I think is fair. I don't know that it's fair, but I can appreciate it. Is when the SEC, instead of charging all these issuers of tokens, they just sort of name them. So, for instance, with Coinbase, they'll pick a bunch of issuers, meaning companies, token company, whatever you want to call them, and they'll say those are securities, and as a result, you were trading securities, but they don't name those companies as defendants, and that's kind of an oddity, and I can appreciate someone saying that's not fair, because once they name a security, all the exchanges then drop that security from anything that they're offering. So I think that when it comes to a complicated case like actually bringing a case against Bitcoin, it's just there's too many other much easier cases to bring. Stephen, did you want to add to that? And then Shane, you've got a comment? In my view, the key is fiat currency, number one. The second key is transparency. And if you look at if the banks decide that you can't get fiat for crypto and won't let crypto enter the banking space, then what are you going to do with your crypto? Like I've said a few times on this space, is that it doesn't function well as a currency. It doesn't function as a store of value. It doesn't function as anything useful other than as a speculative tool. And so I just don't see.
Sorry for the interruption. But money is something useful, or just tracking for wealth? Money is paper, right?
Yes.
So what it means, it is a currency, right? What a currency means.
Well, look.
Do you know why there's $1 trillion invested in crypto? You think people are just retarded and fascists?
Yeah, well, I think it's all going to go to zero. I mean, Stephen, what's your view with respect to? We talked a little bit about this before. Can you stop a $1 trillion industry?
No, you can't.
The crypto market is that these numbers are not really real, right? If I create like a shell company and I issue like 1 million shares and I sell one of them to myself for $1 million, technically, like the market cap of Stephen Coin is $1 trillion. But it doesn't mean anything because like there's no actual liquidity. It's all like wash trading with myself, right? And so that's what's happening in crypto. Like all of these market caps are inflated. Most of these coins are highly illiquid. So the $1 trillion number that people throw around is often very, very misleading because most of these tokens have very, very low liquidity, right? And none of them have any intrinsic value at all. They don't function as money. As investment contracts, not an investment in anything. And so a lot of it's really just pure, just naked speculation and wash trading. And that's a really dangerous place to put your money because the numbers are fake and the markets are rigged.
Yeah, no, exactly. Jenny, you've had your hand up for a while. So I appreciate Carlos's point because it's not easy living in Brazil where the currency is very challenging and where the government is very challenging. Jenny, you've had your hand up and waiting patiently. What's on your mind?
Thanks, John. John, I actually have a question for you and Nora. It's a great space as always, John. But prior to my question, I wanted to comment. He's not in the room anymore. To Ryan, his argument, his stance about crypto. But anyway, he's not here. But to those who have a similar stance as Ryan, he was mentioning how fiat, currency has more crimes than that of crypto. Here's my take on that. As I've shared earlier, the facts are there's only 5% of the global population right now, actually it's less than 5%, invested in crypto. Okay. Now, we've already witnessed a significant amount of criminal activities in the crypto space, especially FTX. Now, FTX alone, okay, could even be bigger than the financial crimes such as Bernie Madoff in the traditional finance. And we're not even there yet with Binance. And then there's Coinbase. And then there's Ethereum. And then the USDC stablecoin. And then the mother of all is Tether. Now, what I've read is Tether literally controls 2/3 of the crypto cap market right now. So if we're not,
which by the way has an infinite supply. So
yes,
according to them. So let's not forget that part.
Exactly. So to those who are having the same stance as Ryan, okay, and say, oh no, crypto is good. Think about that. I mean, we're barely at the stage of FTX right now, and the FTX could even be larger than Bernie Madoff, while the crypto space is only 5% of the world. Imagine if 5% gets any larger. When are we going to say, okay, enough is enough? So anyway, if Ryan was in here, or those who have similar stance, that's my take. So here's my question, John and Nora, please. Probably more John, but Nora, you too. I've been a huge fans of yours lately too as well. John, I wanted to take you into the world of venture capital, which weirdly, I happen to be a VC. But again, in every single sectors, there are good guys and there are bad guys, the bad actors. Now, I'm going to mention a really big name, and you know what? I don't give a fuck, right? Because I think they're just bad, and that's Andreessen Horowitz of A16Z. Okay, those are fans of his tell me that, yes, Jenny Todd just mentioned his name. I would love it for the SEC to investigate them, Sequoia, and all of those big VC firms up in Silicon Valley. Now, are there cases like that, John? Because I believe guys like A16Z, Sequoia, are a bunch of frauds. I mean, they are powerful people, no doubt about that. They're bad guys, in my opinion, extremely bad guys. I already have this pen, but I haven't published it yet. I actually pen a piece, and I wanted to blow the lid off of this group, okay? That they literally hide behind guys like Elizabeth Holmes, guys like Sam Bankman-Fried. They would load these people with billions and billions and billions of dollars because they're making a bet that if these idiots, again, Elizabeth Holmes, Sam Bankman-Fried, are walking on a thin line to do the illegal stuff, and if they get away with it, and their investment, again, the A16Zs of the world, would triple, quadruple to gazillions of dollars, they will walk away with the profits. But on hindsight, okay, if these idiots, Elizabeth Holmes, Sam Bankman-Fried, were to get caught, then these masterminds like A16Z, Sequoia, and all those guys that I'm listing their names right now would say, oh, I didn't know anything about that. I was so dumb, fucking dumb, of not doing any due diligence on FTX, Sam Bankman-Fried, but I gave him billions of dollars, and then, but you know what? I don't know anything about that. So he's going to prison. I would love to know about that, John. I mean, is it a sensitive issue because they're just so big and nobody talks about it? Or how do we put these VCs, which I'm calling them out right now, I believe they're criminals, in prison? Because I believe they're also criminals. They're the ones who are behind touting these. They should be doing their due diligence before they feed these people with money until they're not. And then the little guys would look up to them and say, oh my God, if A16Z is in it, maybe I should put my money in it too. And then everybody gets burned, everybody gets hurt. So that's my question. I don't know how you're going to answer it, John and Nora, but that's
Sure.
okay.
I can answer that. So first of all, anytime these entities are perceived as potentially complicit in any of these crypto-related or Web3-related or blockchain-related investments, you can be sure that the SEC staff attorney, the enforcement staff attorney, is going to send subpoenas for their testimony. So my guess is they're routinely testifying with respect to any entity that's being investigated that they're investors in. Because number one, you want to cover everything when you're a staff attorney, and number two, you can't ignore the potential liability that could be there. So that's the first thing I would say. You're never going to know about it unless they actually bring a case, and the SEC is certainly not going to mention out loud that they're investigating. And the entities are smart enough to say, as opposed to some of these crypto entities who like to boast about the SEC investigating. I think the venture capital are more sophisticated than that. But anytime they're intertwined, they're going to have the best lawyers and they're going to be defended. What you're touching upon though is something I've written about that really bothers me, which is the due diligence. I think you're exactly right. The due diligence is not, is this a good company that will be profitable and will create wealth for our investors in a way that I'm not talking about being socially good or anything. Just, is this a profitable investment? Let's dig deep into what this company does and figure it out, and get Bain to come in here and help us, and get PwC to come in here and look at all their financials, and then we make an investment, and maybe have a short time frame. Maybe it's 5 years before we have to sell, or we have to show something to our investors, because venture capital might collect money from someone. I think investing in venture capital is very dangerous for people, because you have no liquidity. You typically pay a decent sized fee, and you really don't get the kind of transparency you would if you were investing in a public company or an index fund or something like that. But the big thing is the liquidity. You're locked out, and you can't get your money back, typically because of the contract, whatever you sign. And you may be subject to an additional capital call, depending on the arrangement that you have, or dilution. You may be subject to dilution, and the risk pages, like if you look at some of these crypto funds, the risk pages, if the fund offering document is 100 pages, the risk pages are like 75 pages of it. And then the risk is laughable, what you read. But what bothers me is that they're not conducting normal due diligence. They're just sort of, at least this is my opinion, and I can't speak specifically about anyone, but it seems to me the idea is, hey, can I make 10x off of this? I don't care about anything else. And Sam Bankman-Fried actually alluded to this when he was talking to Andrew Ross Sorkin in that famous CNBC interview. It's like the VCs that came to him were just saying, can I get 10 times my investment on this? Is this a good flavor of the month? So I can pitch it to the world. Can I participate in a way to spread the glory about how wonderful this company is and drum up so much excitement that I can then just dump it and make a quick profit? It's not a question of how good the financials are. That has nothing to do with anything. Because if you look at all the investors in FTX, which included Sequoia, and you wonder what kind of due diligence they were doing, because there was no infrastructure whatsoever dedicated to any sort of professionalism based on all the reports that have come out from the new CEO of FTX. That within, I think, a week, he was before Congress saying this was the worst run corporation he'd ever seen in the history of his work, and he had done work for a whole bunch of other really dysfunctional corporations. But I think it was just a matter of groupthink. Hey, they're investing in it, so I will too, number one. And then number two, hey, I think I can pitch this. This sounds like the next big thing. All I have to do is use my platform to spread the word, and this investment is going to go up, and I'm going to make a profit. And I think that that's a real shame. And it seems to be the reality of how these entities, not all venture capitalists, I have other friends who really do a great job of helping startup companies do better. One of my friends in Massachusetts, who I've recently reconnected with, is amazing. They provide incredible services for the companies that they finance. They act as acting CFO. They join the board of directors, and they become real participants in making the company great, like a normal kind of thing. But this other idea of just,
But that's like unheard of in
get
VC,
10x?
for the record, John. That's like what you're saying. I'm like, what? What is this fantasy like VC you're talking about?
Oh no, well, you're right. I mean, it seems to be. I don't know. You can't. It's very difficult to kind of dissect the space because there's so many unknowns. All you know is kind of what you read in the journal. But
I have
but
a
I
lot
do
to
know.
say, but
Yeah.
okay,
So go ahead.
go.
No, I'm anxious. Go ahead.
I mean, honestly, Jenny, you're really putting me in a difficult position here as a startup founder who is deeply entrenched in the startup and tech scene and knows VCs and knows a lot about the inner workings of pre-IPO funding as well. And this is definitely one of those times where I really should just keep my mouth shut. But who fucking cares? I'm already blocked by the head of Y Combinator as a founder, which I'm literally proud of, just because I left a bad comment on him. What a pussy. Anyway, number one.
Wait, Nora, for a quick second, what is the company that you're running now? What is it?
It's Gen K. You say I'm in hard tech. I manufacture luxury leather goods using CO2 laser industrial technology. So it automates a good chunk of the labor efficiency process. Blah blah blah.
And then before that, you were a securities lawyer.
No, I just worked in securities law and I went to law school. I actually wanted to start my own company before my parents forced me to go into law school. Then I was in med tech doing basically contract law and deals.
Okay.
So
sorry, I cut you off, but go ahead.
No worries.
I think you have a really good perspective on this.
So I mean, I'm going to say from the SEC perspective, where they can obviously take action. If you look at COINBASE's IPO, right in there, the amount of money made by Andreessen Horowitz is pretty eye-popping because there was no hold time in terms of when they were able to sell their shares post IPO. So how much jurisdiction the SEC has pre IPO, I don't know enough about the intricacies in terms of the later rounds of investment, to see where that goes. But I do know a lot of people who are in the VC business, and they don't even care. I know a lot of people who are insiders, and they don't even care if a business or a startup they're investing in is going to eventually turn a profit. If they get in on a seed round or a Series A, they'll make their money back by getting in later rounds, Series B, Series C investors at higher valuations. And literally the idea of think about all these tech companies that went public without ever being profitable and no path to monetization or even a plan for monetization or to become profitable. And that's the norm. That's the norm actually. So I'm just gonna leave it at that to tell you how I feel in terms of where the corruption is and how little they care about actually funding good companies and how much they just care about making money.
I think that. Maybe I spoke too fast. Try again. Oh, there you go. Go ahead. Speak up.
Hey, John.
Oh, you can't hear me? All right. If you log off and
Could you hear me? Could you hear me? Could you hear me now?
I can hear you. Yeah.
Okay. Yeah. So, yeah, a lot of the VCs are crooked. Okay, fine. But everyone knows that. I think that it's, much of a marketing ploy at the time, right? So you guys are kind of right, but you're not exactly right. So what it is called when everybody wants to be in on a particular round, it's called piggybacking, okay, in the VC world. So when you piggyback, there's one fund that leads everything. And in this case, it was Sequoia, right? So when everyone knows Sequoia is in a round, then everyone follows. Because when they want to raise their next fund, okay, they want to say, oh, look, I have FTX on my pitch deck. This is one of our portfolio companies. It's a marketing ploy. That's all it is. Okay. But yeah, Nora is right. Most, and as the typical VC model is, right, it's based on the power law. So 90% of your returns come from about 10 to at most 20% of your investments, right? So
it almost became a benchmark, right? You had to follow on what these funds were investing in.
Interesting.
I
So,
don't
Jenny, I think
necessarily agree with that. Knowing certain LPs, it depends on the LP. Yeah, that's in some cases that's true because it is harder to if you talk to venture capitalists, they'll say, trust me, it is harder to raise funds as a venture capitalist than it is as a founder. Especially VCs who are former founders, and I understand why they have that opinion. But I also know people who are LPs and that's just not necessarily true. It maybe is for certain LPs where the VC ends up investing in people who they know have ties to LPs, and thus they're more likely to raise a fund, and that's where their bias comes in, and maybe that's what you're talking about, Brendan. But that's not always the case.
Okay, I think Jenny, you got an earful there. I don't think any of us, because again, it's tough to make too many generalizations about the market, but I like that we got a bunch of different perspectives for you, and one from a regulator, one from a participant, one from a founder. So it kind of gives you. But I think we'd all agree that you're right to be annoyed and upset and feel like something should be done about it. But I don't think anything will be unless somebody's committing fraud.
I just want to say something, John, because I think. Obviously the term is crypto, right? But crypto is really, it has all of the same variables that finance does. It's just unregulated finance. And it's wrapped in a different, I don't know what I would call it, maybe it's wrapped in a tech narrative, which is fine. I invest in tech companies, so it's sort of, my my line of work, but it's just finance. So like TradFi, DeFi, crypto, like it's all the same thing. It's just wrapped in a different way, right? Like crypto has all, it has liquidity risk. It most certainly has key man risk, probably the most concentrated key man risk of any industry. It has, I mean, in my opinion, now has a lot of solvency risk. It acts just as, I actually think, just with my experience, I think that in a lot of ways, like the crypto markets are actually like more predictable than equity markets, because who you're trading against pretty much. You can kind of see the board. There are a few very large players in the market. Like it's not that, I mean, if you're a trader and you watch it for a while, you can sort of figure it out, but it's really not that complex. But it is a very it's a very vulnerable market because of how concentrated it is, and there is no decentralization. Right? There is no decentralization. That's a myth. It's actually gotten more centralized over time.
Right. If you're talking about whether it's the wallet or the exchange or the miners, there's plenty of third parties in there. So I agree with you. But I guess I agree with you that it's treated like every other marketplace. But I think the basic due diligence is, I'm someone that can go into a company and try to help provide a valuation for that company. I think that, if you're going to look at it in terms of risk, you're right. You can classify the risk. You can look at key man risk. You can look at market risk. You can look at regulatory risk. But I just can't imagine a crypto firm that doesn't check all the boxes of incredible risk. Even if you were to put aside the boilerplate risks and just say, all right, you're dealing with an entity, you're dealing with market information that is likely to be all manipulation that you don't have a window into unless you have a real expert telling you. And you're dealing with a den of thieves. At least with you've got an education and you've got a history in finance. I think in many of the situations with crypto and in the companies that you're dealing with, you don't have that kind of background.
I actually think that the quote unquote crypto natives actually have a disadvantage, because I don't think that they realize how well, I think they're starting to realize, especially some of them, how dependent crypto is on the traditional financial system, particularly banking, right? And when banking becomes kind of fickle for them, it becomes a problem.
Exactly.
Clearly. So it's just kind of funny how, like, a lot of the narrative is, unbank yourself. Well, you kind of need the banks, right? I mean,
right.
so
what are you going to do with your crypto? Either you're speculating in it or you're turning it into a bank.
No, listen, I think there's two types of, well, I don't want to say there's two types, but there's two types of main participants in crypto. And there's one that just views it as a fugazi asset class, which is kind of how I view it as. And then there's the other group which views it as, we're changing the financial system. No, you're not. Right. It's just another layer of the existing financial system. Okay, well, that's all it is.
No, I remember I had a friend of mine who was the commander of the DC. So I would recommend those are the Zeke's book, the Easy Money book. We'll see what Michael Lewis's book. I'll probably read it, just because you kind of have to.
I just stick to I stick to regulations and like litigation filings. you can't. Don't assign me extra reading, John. That's enough for me. Like,
okay. I'll read it and I'll let you know if it's if it's challenging. But check them out. All right. Well, I think Nora is 5:23. I think the last one we did was 5 hours and 20 minutes. So we've broken this record, 5:23. I think thanks to Jenny, we were able to get some extra help. Thanks to Stephen and Mercury. Thank you for chiming in.
Thank you so much.
Software engineer. We know you're going to do great. And everybody else who's still listening, thanks. Nora, enjoy your football tomorrow on the West Coast. And Jenny, you too, enjoy everything. We all wish you the best in everything that you're working on, Jenny. Even though we may disagree on certain things, we want nothing but success for you. So good luck to everybody. I'll have the next space when something big happens. In the meantime, though, I really appreciate everyone coming. It's just a great experience to do these things, and the time does fly. So take care, everyone. And good luck to everyone. All the best. Bye-bye now.